What is going on, investors? Hopefully, guys are doing well out there. It is time to talk about Snapchat, ticker symbol SNAP. The company just reported their Q1 earnings after the bell. We'll get into them. We'll take a look at the revenues, the profits, everything that I think you need to know. We'll take a look at the geography. We'll take a look at the average revenue per user, any daily active user growth that is still there in Snapchat. We'll take a look at that. We'll come over here to the financials. We'll look at this, see some things that maybe have gotten a little bit better, but a lot of things that really quite the same with Snapchat. And then we'll look at this from a technical perspective. Now, one of the reasons why we're looking at Snapchat today is, quite frankly, Facebook reports their earnings next week, and I've got a comparison of the two. Look, both companies are essentially in the same business, online advertising, and we're actually seeing, especially over the last year or so, the stocks are actually pretty well correlated. The candlesticks on this chart is Snapchat, and then this orange line that you see, that is actually Facebook. And so really, since the beginning of 2021, these stocks are almost perfectly correlated in terms of their direction. And so the results we see today with Snapchat, I think, are a prelude to a certain degree. It's not guaranteed, but it could potentially be a prelude to what we see with Facebook heading into earnings next week. Now, during the regular session, stock was down about 4.3%. Vast majority of the market was down. Now, in the after hours, the stock initially slammed down by a huge amount, but is now actually up by 5.5%. I'm not exactly sure what that is due to. It could be simply just technicals, because when we look at this from a technical perspective, Snapchat actually went public at this about $30 per share price range, and here we are several years later, basically smack dab on the nose on that price. Talk about this from a technical perspective here in a moment, but I do want to get into these numbers. Revenues came in at just a shade over $1 billion. That was 37.8% year over year revenue growth. That did miss expectations, though, by about $10 million. They also missed on that EPS side. I think what initially had the stock down in the after hours is people are looking at this revenue growth year over year outlook for 2022 in the second quarter. They're expected to grow just simply between 20 and 25%. The street was expecting closer to 28%. And so we're starting to see the evidence of those Apple iOS changes still not going away. And I still think we're seeing these when we get into these numbers. We've got revenue by geography. Now, hang with me. The iOS app was updated sometime, I believe, in between Q2 and Q3 of last year. And now what we're seeing with Snapchat, yes, year over year, you're up 38% on those revenues, but we're seeing a flattening, or in some cases, a decline over comparable quarters when it comes to the iOS change. Yes, you have this fourth quarter where there's a lot of ad spend. There's a lot of burning through money in the advertising environment. We'd expect this fourth quarter to be abnormally high. But if you compare it to Q3, which is a similar type of quarter where you had iOS changes intact, well, all of a sudden, you're basically flat year over year on that revenue side. We're seeing a similar type pattern basically across the board. Now, in terms of average daily users, you're starting to see a little bit of a flattening over the last couple of quarters. Although you're up 18% globally, in North America, you're absolutely seeing daily active users starting to flatten out. Same thing with Europe. You are seeing the largest growth in the rest of the world. This is the case with the vast majority of social media stocks. Now, unfortunately, the rest of the world has some of the lowest ARPU, or average revenue per users. We see it's just 95 cents per user. So despite the strong growth in those user metrics, we'll look at what you earn per user here in North America, over $7. But again, that is actually down from where you were in Q3 of 2021. And the reason why I keep flashing back to Q3 is this is when the vast majority of those iOS changes were in place and when the problems started to occur for a lot of online advertising companies. Now, in terms of their revenue, we talked about how you had this $1.6 billion on that revenue side. That was 30 some odd percent growth over the last year. Now, what is not great about this company, and why I've never recommended buying this stock, and quite frankly, this is the problem with a lot of social media stocks, including Twitter, is the fact that you've got egregious, absolutely egregious total cost and expenses over at this company. They spent over $1.07 billion last year. This year, it ballooned to $1.3 $3 billion. So despite the pretty nice gains in revenue, your operating loss didn't really get much better. You lost about $300 million last year. This year, you lost about $270 million. Until that gets cleaned up, until this company starts running more efficient operations, quite frankly, I wouldn't really be interested in investing in this company. Now, from a balance sheet perspective, looks really good, okay? They've got about $5 billion in cash. That's a little bit more than where they were at the beginning of the year. The vast majority of that coming from a convertible note, so they raised a little bit of money. Most of that flew to the cash side of the balance sheet. From a cash flow perspective, the reason why Snapchat leads with the statement of cash flows is because this is how they want you to value the company. They had a net loss in the quarter of $360 million. That compares to a $286 million net loss on a quarterly basis last year, but they want you to ignore the fact that they paid executives $275 million, not for a whole year, not for 10 years, just in a quarter. Stock-based compensation in a quarter at Snapchat, where they lost $360 million, was $275 million. This is why, again, I haven't been recommending this stock, because it's not shareholder friendly to you. If you work at Snapchat, if you're getting these stock options, it's great for you. You can lose a bunch of money, and then you can cash in your shares in the open market and go buy a new beach house or a new car. If you're the common shareholder, you've seen that if you've held Snap since the day it went public, you've basically broken even on your investment. And then when you factor in opportunity costs, you could have been in Apple, you could have been in Amazon, you could have been in Google, you could have been in Facebook, and you'd actually be having some gains on your investments. This is a terribly run company, quite frankly. This is probably what Elon Musk sees a little bit in Twitter, because quite frankly, you go through Twitter's financials, it paints an identical story. They don't print any money to the bottom line, and executives and employees are paid handsomely in terms of stock options. This is why employees over at Twitter are absolutely flipping out, because they know that their gravy train would likely end if Elon Musk took over. If you watched our video on Tesla earnings yesterday, it's completely the opposite at that company. They do a nice job controlling costs. That's why that company is wildly profitable and has a far bigger valuation than both Twitter and Snapchat combined. When you get to factor in stock-based compensation, well, yeah, you print $127 million to that positive cash flow line off of that $360 million net loss, but I don't value companies that way. Snapchat wants you to value that way. Bullish members of Snapchat's investor group wants you to evaluate on this positive cash flow. This cash flow is not positive. If they had to pay these employees, their offices are located, I believe, in Santa Monica, California, which is one of the most expensive places to live. If they weren't paying the employees of Snapchat with Snap shares, well, they would have to be paying them a heck of a lot of money, because it's not cheap to live where these offices are located. In terms of the rest of the cash flows, we talked about how they did bolster up their cash position by the fact that they had $1.4 billion worth of a convertible note that bolstered up the balance sheet to a certain degree, but could eventually convert to equity and dilute you as a shareholder. From a technical perspective, like we talked about, this one is starting to mirror Facebook in terms of its performance over the last 2 years or so with Snapchat. I am actually on a weekly chart. I'm going to take Facebook out of there because we don't really need to see that. And it's really pretty simple with Snapchat. We are sitting essentially on the IPO price right around $30 per share. It has bounced off there several different times. Again, I'm on a weekly view right now. The stock is still very much technically locked into this downtrend. And this downtrend, quite frankly, is intact until you see some sign of breaking out over and above it. And quite frankly, you'd have to get up over $40 per share to really kind of take out the previous highs here and really show that you have opposite momentum in this stock. On the downside is you break through this very critical level right about $29 per share. If you break through that pretty solidly, I think you have a pretty high probability on this stock of actually coming underneath $20 per share. I still think Snapchat is wildly overvalued. We've got a $47 billion market cap on this company that does about $1 billion a quarter in revenue. We're seeing that its user growth is starting to shrivel up in its key markets like North America and Europe. We're also seeing their average revenue per user start to decline to levels that are certainly look like they're going to be impacted by those iOS changes that just simply don't allow for the targeted ads to be shown Advertisers just simply not willing to pay up for that. And so when you start to see leveling out of your user growth and a decline in your ARPU, especially in your most critical markets, that is certainly one of the reasons, and probably the biggest reasons, why this stock has literally gone nowhere over the last 3 years. But this is a prelude to Facebook, which I think will put up similar type disastrous type numbers and guide to similar mediocre type revenue growth. But the stocks have been beaten down so much over the last year. In Snapchat's case, over 49% drop over the last year. At some point, these stocks become a little bit oversold, and you will see rebounds, at least in the after hours. But again, the stock was down 4% during the regular trade, up about 5% in the after hours. So essentially flat over the last 24 hours with Snapchat. Nothing really to get too excited about here, but does give us hope heading into next week when it comes to Facebook, that they can lay a brick in terms of their earnings, and then we won't see the stock slide even further than it has over the last couple of months. That was Snapchat. Hopefully you guys enjoyed today's video. Be back again soon with more. Good luck with your investments.